about these numbers specifically on the back of the manufacturing numbers. Let's throw in the debt there as well, the need for structural reform. Is China the big worry this year?
Well, China is certainly a risk, Axel, and it has been in the forefront of investors' minds in the second half of the year, particularly given the performance late last year on the emerging market side. But we are looking for a growth moderation. I think we should emphasise that, certainly in the fourth quarter, down to 7.6 from 7.8. But we do think that the government will do enough to keep the cap on credit growth, particularly. Growth is moderating, and I think these numbers suggest it'll moderate possibly through into the first quarter. But we're still looking at something over 7.6, maybe close to 7.8% growth next year in China. But risks are yes, somewhat to the downside. But there has been good news. I mean, house price inflation has moderated. We think the numbers, the big picture numbers on local government debt are probably somewhat exaggerated. The key concern about local government debt is the speed of its accumulation, and also the fact that the concentration of the debt of general government debt in the local government sector itself. But I think clearly, the market is going to have this at the forefront of minds through the first half of 2014, but we're not expecting a catastrophic decline or deceleration of growth. The worries are that these spikes in interbank rates that we've seen, the tightening in liquidity we've seen, do actually have an impact on sentiment more significant than many imagine.
But that's going to keep, will those worries keep a cap on equity gains in Asia?
I think it's going to continue to cloud the picture for emerging markets. It's one of the reasons why we were cautious going into the first half of the year. It's going to clearly affect the story in commodities. We've seen weakness in commodities again outside the precious metal sector in the first days of the year. And I think generally it does cast a cloud over the Asian sector. Again, those markets we think that perform best are the ones that are reforming, where there is a valuation argument, and particularly those that are actually exposed to an American, US revival.
Weakness of the yen was a big theme, of course, last year. It continues to be a big theme at the beginning of this year. How long is that going to go on?
I think it's going to continue. I think up to and including the debate over when the Bank of Japan actually responds to the possible impact of the consumption tax hike. You could see a further weakening in the yen. I think clearly we would expect a further weakening in the yen in the run up to that, possibly a delay in the Bank of Japan's response to the potential risks around the consumption tax hike. We are still looking at playing this story in Japan in the first half through a weaker yen rather than actually as a key preference for Japan within our equity portfolio.